Hey kids, it's Dean with Crypto the Wonder Dog Show. Today on the show we have Charlie talking. We have a bunch of articles that we went over. We've got people going to Africa for some weird reason. To fintech's going to Africa. We have the DLT. How can reshape the power industry and redistribution, and also is the British banks, are they voting for the dollar? All that and more coming up on the Crypto the Wonder Dog Show today. And if you haven't already, please like and subscribe on the YouTube show. And if you haven't already, stop by the Crypto the Wonder Dog website, which is cryptothewonderdog.com. Check it out. There's links to all of our outlets. There's information about myself, there's information about Charlie, and then there's a gallery of on our iTunes page, which you can just click on and just watch any show that you want to. And at the bottom, some of our sponsors. So we're going to be doing more and more interesting shows. I know that these are very interesting now. Possibly going to other states, other countries, and coming soon to a federation near you. Maybe we'll be in Russia sometime soon. I think that would be a lot of fun. You got an idea of what you want to hear about on this show? We could dig into it for you, and we're uncovering a lot of information for the people. If you got information, if you got a question about what's going on in the world of fintech and blockchain and cryptocurrencies, drop us a line and ask. We'll be more than happy to do some investigating and let you know what's going on over there. Anyway, today's show, we have Charlie Rojas, and he's up in Oregon, and thanks to the wonder of FaceTime, he looks like he's sitting right next to me. So, all right, there we go, and enjoy the show. Here we go. You guys ready to go? Ready to start the show? All right, let's start the show. All right, Charlie, my main man, Charlie.
How you doing?
What's going on in the land of the ducks over there?
We get a lot of fire, and so it's
like
we've
California.
Just like California. I mean, it doesn't stop at the border, and there's a lot of dust and a lot of smoke in the air. So it's kind of made it some very interesting days. Very, very smoky.
Wow, I had no idea.
Yeah, baby. Well, nobody really cares about the Northwest, really, except people who live here.
Yeah. And,
it's like, if you're going to flee the United States, anywhere from the United States, the last place you can go is either Alaska or here. This is it. You got nowhere else to go unless you want to go to Canada. So, that's just, I kind of like it that way.
Yeah. All right. Yeah. California's been on fire too, and I don't know if anybody out there knows that Yosemite was on fire. I was going to go to Mono Lake with my daughter, and we do these really cool area nighttime shoots where you can shoot the universe. You can see the Milky Way and stuff, but you have to do it with zero light pollution and obviously zero sky pollution. So that wasn't going to work out for us.
Yeah. If people don't know, Dean's a photographer, among other things, and he's a professional and very, very good at what he does.
So. Drinking coffee and thanks, Charlie. That was very nice of you to say.
I got to get a plug in there soon.
Yeah, I do. KirklandDigital.com if you want to check out Dean Kirkland's fabulous photography, and if you want to buy any, let me know. I can make you a Crypto the Wonder Dog deal. Yeah.
Yeah, but you have to like and subscribe. Sorry,
you have to like.
man.
Oh, please, yes. Also, like and subscribe if you're on YouTube. Please click that subscribe button and hit the little bell. That'll let you know that anytime we upload a video, that you'll be able to watch that. You'll be one of the first kids on your block to see the new episode of Crypto the Wonder Dog.
That's right.
So we've been getting more and more outlets, more and more stations are picking up the wonderful Wonder Dog show, and so Charlie and I are becoming international superstars, and even in Russia. So we're going to be pumping some stuff out to Russia here. We were actually requested to do a few stories. Which one you got there first, Charlie? I know that you're the one that does all the research. I don't.
Yeah,
I rarely do research. So.
Well, there was one interesting. Well, you're the technical guy, and so you're busy enough being the marketing, technical, and outreach guy. That takes a lot of work.
Yeah,
so
it does.
But anyway, the first story that I looked at was it's from Bit
News Today. That's our new outlet. Yeah,
and how their title of this story is how DLT can realize the power of power redistribution. In other words, how are we going to get electrical power into homes? What's the more efficient and more effective way? The story, and I suggest people go to it, not just because they're sponsoring us, but because of the fact that they do a really good analysis of what power distribution and the issues that are taking place with that. Now, a few months ago, when we first started the show, remember we talked about Enron?
Yes.
And we talked about what happened to Northern California when Enron started gaming the system, and San Francisco, the city of San Francisco, went dark. They had blackouts, and that went on for months.
And that was because of Enron.
That was because Enron was messing with the markets and the distribution of power. Because here in the United States, you don't usually, a lot of times you get what are called power brokers or energy brokers like Enron. What they do is they buy energy. They don't produce it. All they do is sort of distribute it. They're a middleman.
Really?
Yeah, that's all they were. They were a middleman. They didn't own dams. They didn't own hydroelectric plants. They didn't own any of that stuff. They simply were able to wiggle their way into this deregulated market and become parasitical in the sense that they were just lumping on to the power grid and supposedly distributing energy more effectively and efficiently because, of course, the power of the market, at least that's what they were saying. And that wasn't true at all. I mean, just take a look at what happened to San Francisco and the Bay Area when Enron decided to game the system to get more money. Well, what this article is talking about is that blockchain is going to be the capacity to bypass all of that. There's going to be maybe peer-to-peer distribution of energy, and you're going to be able to get rid of middlemen and people who just are lumping onto the cost of, or just creating a much higher cost for your energy, not because they do anything more efficiently. It's because it's less efficient. You're paying more money for less efficiency. And because, like I said, the infrastructure is still there. It isn't like they have upgraded anything. A company like Enron didn't upgrade anything.
Wow.
And so, we've kind of fallen for this. This is not to say that I'm not talking necessarily about capitalism. I'm talking about parasitical waste of money. And what this article is talking about is that if Bitcoin, and we've said this before too, if blockchain is going to become efficacious, if it's going to become something that people can think of as more than a novelty, then it has to be able to be used in real world applications. Well, this article is talking about that. It's talking about the capacity to have peer-to-peer distribution of energy. Can that possibly happen? Well, I'm not saying that it will, but what it's saying is that there's a possibility that blockchain will be able to deliver that particular situation.
Yeah.
And in that case, if it can, and some countries such as Russia are actually looking into something like this. And that's what I think makes it such an interesting proposal. It's going to be a wait and see because we still have to see if this works out more effectively. But the reason this brings that up, and this is why this is important, blockchain and cryptocurrencies are being created because of the tremendous inefficiencies in markets right now. They're not happening because some nerds or some people just decided they were going to play with algorithms and computers and come up with this. It's in effect a response to some real issues that are taking place in the economy all around the world. And we have to address those things. I mean, blockchain is a symptom of a system that's going wrong. And the creation of blockchain and cryptocurrencies is that manifestation. So, folks, we have to look at the way we live and the way we do things and realize that it's not effective. It's not efficient. And, according to this article, blockchain allows the simplification of massive amount of services. I'm quoting from the article. You can transfer from one energy provider to another quickly and efficiently. In other words, they're trying to bypass companies like Enron that don't provide any real service, that don't provide any real product.
They're just a middleman, which is the one of the main reasons that blockchain exists, to get rid of the middleman.
Yep. Well, that's one of the reasons that Hollywood has gotten to be a problem, because Hollywood, again, we keep saying this over and over again. The cost of getting to see a movie, if you go to a theater, it's ridiculous because you have too many middlemen. You and I have worked on
Popcorn
films.
Does not cost $15 for a bucket the size of my head.
Yeah, it doesn't.
It's like 75 cents, the best.
Yeah. You and I worked with low-budget films that kind of tried to bypass that whole Hollywood system, that whole very inefficient, ineffective way of doing things. And that's another thing that we're going to look at later on. So, you and I can make a film, and if we get the proper distribution, we can easily distribute our product on a distribution channel that's looking at us right now. That people are looking at us. We don't need to go to Hollywood. Hollywood is way too inefficient. Well, they're saying the same thing, and it's because of all the middlemen. You've got a whole lot of producers.
Too many producers that actually, they didn't really do anything. They may have put a couple of bucks into it, but did we really need those couple of bucks if there wasn't so many damn middlemen?
Probably not. And I mean, like I said, you and I have worked as low budget filmmakers. I mean, we wrote our own scripts. We got our own production. We got our own people. Whatever it is, our own locations. We did it all ourselves and put out product. Well, and we did it for a fraction of the cost that any studio could produce. So my point is that the same situation, the same kind of thinking is taking place in energy, in production of power. So, so, and that kind of brings me to another point that's also from Bit News Today.
Okay.
And here's the headline is British banks sabotage the royal coin, and supposedly they're voting for the dollar.
Voting for the dollar.
Yeah, voting for the dollar. So, in other words, what was interesting about this article is that they were saying that Great Britain was going to be the first country in the Western world to announce the plans to create, or we're going to roll out a cryptocurrency. But it never happened, or it hasn't happened yet.
And that was when did they say that? I know that was.
I think that was like 2015, I believe, something like that. It was several years ago. I mean, maybe I'm wrong on the date, but that was quite some time ago. And what's occurred is
it was supposed to be released. The coin was supposed to be released in 2018, but they announced this, I guess, a couple of years ago. Yeah,
that's right. Yeah, and so we're waiting, and they're waiting, and they're waiting, and they finally realize what happened is that the banking elites have said no, we don't want cryptocurrency. It's now there's a guy called Mark Carney who's the head of the Bank of England, which is kind of the equivalent of our Federal Reserve, and he said, he's been demeaning cryptocurrency. I mean, it's not safe, it's not effective, it's it's not a very good store of value or wealth. Well, of course he's going to say that. I mean,
yeah, it's just like Warren Buffett downplaying Bitcoin because he's got so many freaking dollars sitting in a bank, and he doesn't want those to turn into what he calls Bitcoin, which is just fake money. So yeah.
Well, now, in all fairness, and I know you're going to hear, and I'm going to try and play devil's advocate here, and at least advocate for what a guy like Mark Carney is going to be claiming and saying. There's a reason why banks exist, and supposedly it's because they have a really good capacity of understanding where to distribute the money. They take a bank is a middleman is really what it is. They take your money, your savings. They offer you a certain amount of money for that savings in terms of an interest rate, and then they turn around and lend it or put it into some other product that makes more money. They are the middlemen, and they're
the ones. Cut. Okay, yeah, that's that's their version of you get 1% on your money, but they make 26%. That makes sense. Yeah.
Yeah. Well, a lot of times earlier, what banks were doing here in the United States was they were putting it in government debt. They were taking your money, let's say at 2% or 3%, and then turning around and putting it into one of the safest kind of loans you could possibly get, which was government debt, federal government debt, at 6%. So they were literally making money doing nothing.
Yeah.
This happened at various times. I remember it very distinctly happening immediately after the savings and loan crisis. So, and going back, so I can understand why, a guy like Mark Carney and anybody who heads up at the Federal Reserve is going to say, look, you can't trust Bitcoin and, or cryptocurrencies. And quite frankly, they got a point because, over half of them do fail. But I got to tell you something, Dean. As badly as cryptocurrencies might be failing, in 2008, our entire financial system was falling apart.
Absolutely.
Literally falling apart. And you needed trillions and trillions of dollars.
For banks.
Who was
supposed to be the safest thing in the world, yes. And all these people, that was, those idiots that, they were taking hundreds of millions of dollars and just flushing it down the toilet for.
Well, okay, let's just think of all these dislocations that were happening with the financial system. You had back in the late 80s, early 90s, you had the savings and loan crisis because basically but the United States deregulated the savings and loan industry. They allowed them to take money from wherever, put it in many, many risky kinds of investments. But all the while, those institutions were still federally guaranteed and federally insured. The taxpayer was still on the hook. Prior to that, you couldn't. When they were regulated, they said, "Look, you have to make a kind of an investment that's safe because if we're insuring you, we want to make sure that." We're not insuring incredible risk and allowing you to do whatever you wanted to do. But with the Reagan administration, they said, no, let's do away with that. The power of the free market is going to make everything more efficient. Well, and so therefore we're going to deregulate, but we're still going to have the people, the taxpayer, underwriting everything you do. Well, wouldn't that be sweet? You and I don't have any guarantees from anybody about the things that we do. Nobody's guaranteeing or underwriting our operation here with Crypto the Wonder Dog.
No.
This is as free market as it gets.
Yeah. I'm not having Pepsi down my shirt.
Yeah.
Or my back pocket.
It's not even that. It's like the federal government, the taxpayer, underwriting what you're doing and supporting everything you do. Well, that's what the savings and loan industry had happen. They had remarkable amounts of speculation that took place immediately after deregulation. All the while, the taxpayer was still underwriting all of that nonsense. So they fell apart, of course, because when you have this tremendous amount of speculation. See, what happened also is that the savings and loans could compete with each other in terms of interest rates. So the one guy could offer you one rate, the other guy can offer you a higher rate. But the only way that they could give you those kinds of rates is if they put their money took their money and put it into more risky investments. That's why you had regulation in the first place. It was to avoid all that.
Yeah.
Well, what happened? It fell apart. The taxpayer came out with who knows how much. Nobody really understood how much. And then maybe not even 20 years later, maybe 10, 11 years later, we had the same thing happen with banks, with mortgages, where you were giving mortgages away to just literally anybody.
Yeah.
And you had this incredible growth of, real estate development and speculation. And guess what? It all fell apart. Well, again, the people were on the hook for that as well. So to claim that banks or financial institutions are safe is just pure nonsense. They're not. For you to get a higher return, you have to put all that stuff into bigger and bigger or riskier investments.
Yeah.
But the only way they can get away with that is if the federal government underwrites it all and subsidizes it all. And so that's a hell of a scam. I mean, isn't it great that no matter what you do or how badly you screw up, you're always going to get bailed out? I mean, geez.
Oh my gosh, yeah.
Man, I would love to have had that with my with my ex-girlfriends and stuff. I mean, I mean, that would have come in handy for that.
Yeah, that's how divorces should be. No matter how bad you screw up, the government's going to come in and take care of both of you. Oh, yeah, we understand. She was
yeah. Wouldn't that be great? But no, that doesn't happen. So for anybody to, but like I said, I kind of expect these organizations to claim that because again, they're a middleman. They take the money.
They are a middleman. Yep.
The banks are middlemen.
And they know that the blockchain is going to start weeding out the middleman, and they're going to have to go find another line of work. Yeah.
And so blockchain, like you said, if it's going to be efficacious, it's going to have to be able to do things like peer-to-peer financing, which is, it's not going to take out the speculation, but it will make it, I suppose, cheaper to be able to borrow money. And it's analogous to something called, are you familiar with trust? Well, you live in California. Are you familiar with trust deeds? Well, trust deeds.
Yeah, but I'm not a financial guy, so I'm not.
Yeah, there's something called first, second, and third trust deeds. They're called hard money loans. And when I read this, the first thing that came into my mind was hard money loans. And what that is that all you do, if let's say, for instance, I own a piece of property and I have equity, and I, let's say, don't have any debt or just a very nominal amount of debt, I can take that equity and say, hey, listen, to a borrower or a lender, actually, a private lender like you, and say, look, I got this piece of property that's valued at $200,000. I got only $20,000 in debt on a first mortgage. I'll give you a second mortgage at a certain amount of interest if you lend me $50,000. That's called a hard money loan. It's peer-to-peer. You completely bypass the banks and any financial institution. So it's peer-to-peer. I was involved in that a long time ago. Can there be scams? I suppose. Sure, of course. But I've just proved to you the fact that the supposed safe investments can be scandalous as well.
Absolutely.
But that puts it on you as an investor. It makes you much more responsible and say, okay, well, it's my responsibility to go take a look at this property. It's a very simple transaction, simple to understand. The property's here. It's got this much debt on it. I think its market value is this much. I'm willing to get a certain amount of interest if I lend this guy on his loan, on his property. Not on anything to do with his income, just on his property. I'm willing to lend him $50,000 at 5%, 8%, whatever it may be, whatever you negotiate. That's peer-to-peer. That's about as peer-to-peer as it possibly can get. And it puts it on both people. You know your property, you know the person that you're lending or giving money to, that you're lending to, and it forces you to be aware and alert. Well, that's kind of the same thing with blockchain in a way. It forces the person and the two parties, the two peers, and that's why it's important to call it peers, because you're two equal people. You're supposed to have the knowledge of each other well enough to be able to engage in a transaction. I think that's one of the more important things that people don't, and it just hit me right now when I finally start thinking about it. It's peer-to-peer. You're supposed to be equal in this transaction. You're supposed to be able to, with the blockchain, have some measure of safety and an understanding of the other person and what they're trying to do. Just like what you do with the trust deeds. It's already in place in a way. The concept is already applicable in places like California that allow trust deeds to be used rather than mortgages. Well, so this is not a foreign concept. This is not something that people can't understand. People do this all the time, So, but of course, in that case, when you make that kind of loan on a hard money loan, what's securing it is property, something that is there. Now, can the value go up and down? Sure, of course it can. It does all the time. Yeah. But generally, property and the thinking is, real estate holds its value a little bit better than other things. It's it's an established area. You know what the price is. It's not going to lose its value almost overnight, as other things can. Yeah,
like buying a car and driving it off the lot, and you just lost, one third of your.
Or when you finally realize, like for instance, with the stock market, what you trade in the stock market when you go to the Dow Jones or you go to the major. If I go buy stock in a corporation, what I'm trading in is the information the corporation is giving me about the financial information about that company. You're not trading in the actual product. If I go and go to Johnson and Johnson, it's not so much the information or the product that I'm trading in.
You're not trading baby shampoo.
Yeah, it's not that. It's not like I give them a certain amount of money that I'm guaranteed a certain amount of baby shampoo. That's not what it is. It's the information that they're telling me about that financial company. So that's what I'm trading in. And it's all about the information that you can get that's available to you. And with blockchain, the theory is peer-to-peer. You know the information. You know who you're trading with. There's this mechanism that allows this movement of money that's a lot safer, and you know exactly what you're dealing with.
Yeah.
So at least in theory, that's what we're told. That's in theory.
I know.
And so I can understand why this would be a threat to banks and to financial institutions.
As it should be, because people are just being raped for their money, going into the deeper pockets of the people who actually don't need the money, but they're just going to keep getting richer and richer and richer. So, all for the blockchain revolution.
That's right.
Yes.
And then that brings us to the final one, again from Bit News today. And that's all of a sudden, fintech companies are going to Africa. And
which you don't think of when you think of people with lots of money. You don't think of Africa right away.
No. Well, fintech is basically financial technology. It's sort of what blockchain is. It's another way of doing finance through a new technology. And Africa apparently is becoming a haven for this kind of thing because there's nothing really else left there to do. It's kind of a wide. Yeah. I don't want to sound as if I'm some sort of a patronizing or condescending, but according to the article, Africa is wide open in terms of this kind of blockchain technology, primarily because a lot of the banks and financial institutions in many of those countries are very inefficient, and the people there cannot trust who they're dealing with. They cannot trust their governments. They can't trust.
They absolutely can't trust the governments. No.
So what they're saying is, this would be a very good method of being able to get finance and borrowing to people who really need it in a more effective and efficient way.
Yeah.
And so again, these are three articles that I found very interesting, very new. They make you think and force you to do a little bit more research. And I'm glad that you got me to look at these to this new site, and I would suggest people doing it as well.
Absolutely, yeah. I mean, this is really great information, and articles that you don't really think about whenever you're thinking about blockchain. The first thing that comes to mind is not Africa, typically, but when you think about somebody that needs a complete overhaul in every aspect of their whole life. The African continent could absolutely use some help there.
Well, we do too. We need to have we need some overhauls here, baby.
Not to overlook the U.S., but yeah.
Let's not overlook here, because I'm telling you, man, we got like over $1.5 trillion in student loan debt. I mean, I've got to tell you something. That's probably one of the most inefficient and ineffective ways of borrowing.
Did you see the article that I just saw about? I think it was on LinkedIn that I think it's the University of New York medical students are going. They're putting them through tuition free to be doctors. I think it was the University or New York University of New York, somewhere on LinkedIn. I should have paid more attention to it, but that caught my eye that tuition free, which was like $55,000 a year, and to be a doctor, they're actually going to be able to do this tuition free.
Yeah, well, it's because the debt that doctors are carrying, medical professionals are carrying, is so high that they can't really effectively be good doctors. You need doctors. One of the things that you need are general practitioners.
Hey, Charlie, I think your video paused there. Sorry.
Yeah.
Can you unpause that?
I'm trying.
Uh-oh. There you go.
Okay, there you go.
See you again.
I apologize for that, folks. Right. I'm such a popular guy. People love me at this kind of time. But going back to what I was talking about, you make your money by being a specialist. But that doesn't necessarily mean that that's what we need. We don't need specialists as much as we need general practitioners, people who you can go to and say, Doc, I'm not feeling good. Can you do...
Yeah, they said there was such a lack of doctors in the U.S. that they were like, well, we need more doctors.
Yeah. But if not specialists, we don't need any more brain surgeons. We need people who are going to be capable of doing preventative work. Well, you can't do that if you're carrying, hundreds of thousands of dollars in debt. That simply can't be done. And so one way or the other, you're going to have to figure out how you're going to be able to get people to be doctors and take on this tremendous responsibility. So I don't know, man. It's just a crazy kind of world. And
it's and I don't know if other students or other educational facilities should follow in this. I mean, I don't know how they're going to make their money. They obviously, the schools have to make money, or it doesn't make sense to be a school. But $55,000 per student per year seems a bit excessive.
Well, the thing is, I went through college, and when I started going through college in the 80s, the schools that I attended, if I was to look at the cost now, it's almost 10 times more than what I went to the school. I looked at the two colleges that I attended, and I looked at their tuition now, and it's close to 10 times more. Are you going to try and tell me, and I've said this to other people too, are you going to try and tell me that the kids now are learning 10 times more than what they learned when I was there?
No.
When my colleague? No. Of course not.
No.
So where in the hell is the money going? It's certainly not
into
going into
the upper ups pockets because they need a bigger house. They need more cars. They need to put their kids through Princeton and Yale and Harvard and stuff. So, if you're going to Fullerton, University of California, Fullerton or whatever it is,
Cal State Fullerton.
State Fullerton, yeah. Make sure you pay that $55,000 a year so your dean or whoever can put their kids through Yale and Harvard. Even though that
$55,000 a year is for a private school. For a place like Fullerton, it's going to be a lot less, but nevertheless, it is multiple times more than what it was, a few years ago. And the thing is, you know why? Like we said before, if you take a look at any of these American universities, you have ridiculous amounts of building projects that are going on, all that debt that's taking place on the campuses to finance and to facilitate all this shit. And it doesn't work. It doesn't help in any way to make academics better. And 10 years after you graduate, nobody's going to care about the quality of the football team, whether or not you had a bigger bench press after a cup. Nobody's going to care about that. They're going to know and care about the quality of your education.
Yeah.
And you're sitting there with an enormous amount of debt, with an education that can't, or a degree that isn't going to be efficacious because the quality of the education isn't that good.
No.
So at some point, we as Americans have to start growing up.
Seriously.
We really have to start saying to ourselves, more or more expensive isn't necessarily better.
No. And, I saw a little meme the other day, which it made a lot of sense to me. I'm like, wow, that's really cool. When you were, what was your first experience with Jack in the Box? How long ago did you experience Jack in the Box? And probably in high school, you could get two tacos for $1, right? At Jack in the Box?
Yeah.
Okay.
I would say that.
All right. That was 30-something years ago, right?
Yeah, I'd say that.
30 years ago. Okay. You can still get two tacos for $1 at Jack in the Box.
Really?
Yeah, you can still get two tacos for $1 for the Jack in the Box. So they either, I forgot what the first one was, but either they did something. I'm screwing the whole thing up, but it was like they either did really great, or they've been screwing me for 30 years. They've been overcharging me for 30 years.
Yeah. Well, you know what? I remember, to tell you how inefficient America is, I remember, I don't go to fast food restaurants, but.
And you don't go to coffee shops either to drink coffee. I remember that when we were hanging out. You go to a coffee shop just for the atmosphere. It wasn't for the
That's
coffee.
That was me. I
was like, hey, let's get a cup of coffee. And you're like, yeah, let's go to Coffee Bean. I'm like, all right. And you get there and you're like, what are you going to have? You're like, nothing. I don't drink coffee.
Yeah, I remember. Yeah. And that's when I had hair, a lot of hair. You kept looking at my hair because you thought some sort of a wild animal was going to come out and, never mind. Yeah. That's a long time. We go back a long time, folks. But I remember when I walked into McDonald's for the first time after, 20 years or something, and you could buy stuff with a credit card. And I looked at this and I said, what? This is fast food. I mean, are Americans so damn broke they can't afford a buck or
Yeah, you got to finance a Big Mac.
Yeah, exactly. I got to take out a loan to go buy McDonald's food. I couldn't believe it. I said, how broke am I? How broke are we that we have to have a loan to buy McDonald's, man? It's like,
well, the other day I went to a grocery store and I had actually forgot my wallet, but I had my checkbook on me, and I started writing a check, and the kid behind the cash register was like, "What are you doing?" I'm like, "I'm writing a check." He goes, "Do we take checks?" I'm like, "Of course you take checks." It's like you'd never seen a checkbook before.
Oh, Lord.
So,
there we go.
Yeah. Wow.
Oh, man. Well, there you go. I mean, tell you about how incredibly ignorant and inefficient America has become. But hey, buddy, you know something? I'm dropping cameras.
You're getting a little punchy over there in
I am getting
Land of
punchy.
Ducks, aren't you? Yeah.
But anyway, I wanted to thank you so much for letting me on today. And I got to say,
letting you on, man. You're part of the show. I didn't let you on. This is part of the freaking Wonder Dog show, man.
Well, I got to tell you something. This is probably the most fun I get because it stimulates. It's really stimulating. You got to think. You got to dig in. I got to talk to you and present a show, or we got to present a show that makes sense to people around the world. Yeah. But it's also still fun because I'm learning something, and every time I come on, I learn something. And I just certainly hope other people are as well.
Well, I'm sure they are. It's been a lot of fun, man.
Hey, folks, like and subscribe.
Yeah, and if you're not on YouTube right now, if you're on iTunes or whatever one of our multiple outlet, please go to YouTube, and subscribe. It really helps us out a lot. And
leave a comment.
Oh, yes, leave a comment. Because we've got. I don't push this enough, but we have Crypto the Wonder Dog tokens, CTWD. That's a real thing. It actually exists. If you go to search it up, we're actually CTWD, and you like and subscribe, and leave your ERC20 wallet address in there. You might wake up tomorrow morning with a nice little hefty amount of Crypto the Wonder Dog tokens. They're worth 0 and 0.0000000 up at the 18 zeros. But you can say you've got some of the Wonder Dog tokens, and once we become super famous, they might actually go up in value, right?
Yeah. And so all for just saying, hey, thanks.
Yes, say something. Charlie's
hat. Something.
Yeah, Charlie's hat's ridiculous.
It is. It is not.
Yeah, Dean.
It is not. Don't leave that because you're not going to get anything if you do that. I made this damn thing. I refuse. I put my foot down on that. But I'm going to tell you something.
Was that a summer arts and crafts class that you took?
I only speak English, right? What was that again?
Was that a summer arts and crafts class?
Yeah, right. Sure, yeah.
Mungo make fire and hat.
That looks like Mungo's hat.
Yeah, well,
the guy that punched the horse. That was yeah.
That and a dingo ate my baby or something like that. But I got to tell you. Leave a comment. It doesn't have to be a good comment. It can be a criticism. It can be that you hate us, that you think that whatever.
Yeah. Just say
anything. Just tell us anything because it gives us a chance to realize what we need to do and how do we get better.
Yeah.
And without you guys, we can't.
We're doing it for you. We're doing it for the people. Yeah. We're peer to peer. We're peer to peer.
For the gente. Yeah, so it's peer-to-peer. Yeah, seriously, this is peer-to-peer.
Peer-to-peer, man. We're not going through CNN on this, man.
All right. Yeah, they wouldn't have us. They would not have us. Anyway, I'll let you go, buddy.
All right, brother. Good talk. Let's do it again.
Good talk.
All right, man.
We'll do it soon.
See you, brother. Bye.
Okay, take care.